Found it. You should hear me now. Thanks, John. Hey, maybe I should do more no sounds. I get I see people that I've never met. Kelly up, nice to meet you. Glad to have you this morning. I apologize. It was muted. I have on the charts right here a 2-minute inversion gap to this high. We have equal highs here, so this looks nice. It looks nice. I'm not gonna lie. Morning, John. How you doing today? How was your trading day yesterday? I wasn't really able to take any trades yesterday because Trade of 8 was down. It was out. It wasn't working.
Order.
All right. I'm getting some, let's see. Well. I'm just getting everything set up, guys. I have, getting everything working. There we go. Get all my copied accounts up and running. I just didn't have that set up yet. Green early AM decided to leave it, and that dude, the ranging was I had just a little bit of FOMO yesterday because I could not trade with Trade of 8 being down, and that market maker sell model. For those that don't know, good morning, Deborah. Glad to have you this morning. A market maker sell model is this bad boy right there. Look, and feast your eyes. You got to put the little logo right in the middle there, you know. But feast your eyes on that, boys. Look at that. I mean, this is if you could print something out and put it all over your wall so you can memorize every valley and peak of this is what you would want to remember. This right here is the epitome. When I got off yesterday, I'll just point this out. I told you that this previous day high was my target, and if we hit that, we could see price give us a setup the other direction. I also marked out this before I got off and I left it. This is the 15-minute change in state of delivery. Look at the accuracy on some of this, okay? We had our first breaker right here hit, came back up, found resistance on the previous day high. We had a big reaction there. We hovered around here, consolidated, broke below our change in state of delivery, you can see right there, and hovered right above it, and then broke below it. Okay, this, we came back up, touched it again, and we continued lower. So this change in state of delivery showed us that price really wanted to move the other direction, right? It could have still hit this and went the other way, but higher probability it wants to continue. So beautiful model. That's what I'm always looking for, okay? If you can see here, I did not take this. I was on my other chart. I was talking, but we're 2 minutes before open, so I'm not going to take that. Deborah, how have I been? I've been good. We just got back from a little vacay over the weekend. We went to a bed and breakfast. They basically fed us breakfast, fed us dinner. it was great. It was great. The kids were at their cousins, so had a good time hanging out with my wife, celebrating our 17th wedding anniversary. It was a good time. So I didn't take this right here. Really, I was looking for a close here, but we're just too close to the open. Okay, we got 2 minutes. 2 minutes or 1 minute before open. Unfortunately, I'm thinking we're probably gonna hit this within that next minute, and I won't take it. It was a shoulda, coulda, woulda kind of day. Oh, you're talking about yesterday, John? Absolutely. That was just, it was one of those days where you just, you have a little chuckle. You shrug it off and there'll be another day, DDT. How come we never hear you talk about Jesus? On the live streams, when it's relevant, I'll bring it up because we're really trading. But in regards to Jesus, I'm actually working on a video. I'm glad you brought that up. I'm working on a video right now on how a verse in the Bible basically kept me in the trading game. And I don't actually have a problem talking about it now. We can talk about some of that. But as you can see, I get sidetracked because price action continues to hit. See how high it just hit the hit the equal highs. So it took out the equal highs right at open. So that took our opportunity away there. So DTT, I love talking about all that because it's been such impactful. Been impacted by it so much. So you will hear plenty of that over time. I just want to do it in a way where I'm correlating what I've read in scripture, verses and words the Lord has given me in the Bible that has impacted me in a tremendous way. And the one that we're going to be talking about, and we'll talk about it today, and I'm going to make a whole video on it, is Proverbs 18, 20, and 21. If you've never read Proverbs 18 verses 20 and 21, there is so much in those two verses that it will change the way you talk. Specifically, it'll change the way you talk, the way you use your words. But right now we got open, we got a lot going on, so I'll touch on that when things mellow out a little bit. And then we'll talk about all of that. We'll talk about 1 Timothy 6, 9, and 9 and 10. I'd love to check that out as well, and we can go over that. Adam, do you have like a Discord server or something? Not yet, man. Not yet. I will look forward to doing that in the near future. Everything right now is free. The best way you can support me is if you do, I don't ask you to do anything you haven't done already or you don't do already, is if you do use Tradeovate, to just use my QR that's on the top of the screen. I'm actually trying to I have a goal of getting to, I need 30 transactions, and then I can remove this ridiculous custom code, NZUCFS, or whatever it is. I can remove it, and I can actually, hang on, I'm guessing, because I'm not on the 1 minute and I'm just chatting. Oh, it didn't pan out. Okay. So the best way you can support me is by using that code. And when I hit 30 transactions, about 30 to, I think it's 40 transactions, they'll allow me to get a custom code. And then I'll be using DTJ, which will be way easier for everyone to remember. So you don't have to be, oh, what was that? What was that code? I forgot. I'll just use this other one I know. That's what I'm trying to avoid. So if I can do something that's easy to remember, hey, it'll be easy for people to use. But only if you use Apex. It's no cost. It's just an affiliate link. I use Apex in all my tradings. Right now, I have 9 copied accounts that I'm trading. I'm slowly building that up one by one over time, looking to get to 20. And that's what I'm focused on right now. So there will be a Discord in the future, but it's just not right now. I want to build an audience. I want to have some impact on people's lives in the free setting before I go to a Discord. And I'll probably do a Discord. The reason I want it a paid Discord is, one, I don't want trolls. And I'm in several Discords, and there's so many trolls. There's so many fake bots out there that pretend to be other people, and I want to avoid that as much as possible. And you get a significant reduction in all of that crap when you have a paid Discord. So it will probably be pennies, but still, having it paid compared to free just limits the amount of bots and crap you get in Discords. Okay, so let's talk about the stuff that matters here this morning. I'm kind of just rambling back and forth here. Let's look. This is the hourly. We're looking at the hourly time frame. We ran these equal highs, right? That's what I wanted to see, but we didn't have an opportunity. And we have a 1 hour fair value gap right here. Let me remove this. We have this hourly fair value gap sitting right here. So the idea here is, if we close above that, I talked about this yesterday with somebody on stream, that if we close above this, that is going to be more than likely a bullish indication that we're going to see higher prices. It doesn't mean that we take a long, but it means that we should expect to see some type of higher prices, and we should look for some type of setup. So we still have 25 minutes for that to play out. If we get this inversion right here, I would take that. Okay. That right there. And it looks like we're probably going to get that.
Okay. Order filled.
All right, we're going to try this here real quick. All right, we're in a short right there. We're looking for these shorts right there.
Order submitted.
Okay, I don't like where it's gone here, but we still have stop out is if we close above this. And it has to be clear and decisive, because it's stop out will be if it closes above this. Okay?
Order submitted.
I can't really see. Go on the bottom right, Deborah, and try to improve. You can improve your resolution there. You should be able to improve it. I'm looking at these relatively equal lows right here. And I have this box right here that's highlighted in what is now gray. And that is, we are looking for it to stay below that. It closed below it right here. And we're looking for it to run these levels right here. Okay. So you're going to be moving. Stop is going to be break
Order
even
submitted
to right now. And if it breaks us out even, then it breaks even. First target here. Let me... All right, there's my screen right there. Break even set. We're just looking for what stop has to be break even, because we came below this level.
Order filled.
Stopped us out.
Order canceled.
Stopped us out for that. Yep. So that is, I would call that an A type setup. Why? Let me explain. That was a decent trade. It just didn't give us the numbers that we wanted. Let me show you guys what I was looking at here. All right, we ran this high here. We really didn't redeliver from anything, but we were aggressive to the downside. We closed the only fair value gap in this leg. My target's going to be here. As soon as we close below this and you get such an aggressive candle, you need to go short. I mean, it's an A type setup. As soon as we come back up, we don't break it, and it comes down and breaks below this low right here, you need to bring that break even. You need to bring your stop to break even. If you do not, this right here can happen. This is why we move that stop to break even. That break even just saved me a ton. I'm at 0. I could have been at down 20, 30, 40 handles because of that. That's 40 handles. There's, right, my entry was about 44. We're at 80. That saved me. So it should have ran this, but it didn't. But when you run a internal swing low, like you see right here, that internal swing low, and it breaks below it, you move your stop to break even. Okay? You have to do that. It will save you whole bunch. So hopefully you could have seen that. Deborah, were you able to get your chart on the bottom of YouTube? If you hit the settings icon, you can change your resolution to, like, advanced and then or higher quality, and you should be able to see some more of the details. Hey Mags, how you doing? Hopefully you're having a good day. I'm not liking this back and forth. I mean, this was nice. This was a great learning. That was great to learn off of. That was fantastic. Hopefully that made sense to you guys. I'll do a quick video on that, or a whole section on that I'll probably turn into a quick video. So we have this hourly is going to close in 19 minutes. We want to see if the body of this candle closes in it or above it. Where does the body close? Does it close in it or above it? We got about 20 minutes before that. So if we go down to the 15 minute, if we do close above it, we are bullish. We have to consider it as a bullish move, and probably up to this level here. Why this level? Why this level? This level because we have overlapping PD arrays in lower time frames. Guaranteed. Guaranteed. I'm not even looking at it, but it's almost guaranteed that we're going to have overlapping PD arrays. I have this line right here, so I know something's there. But this green candle on the 15 minute, I talked about this yesterday. It's the first candle that hit this PD array, the previous day high. So this right here is a change in state of delivery. That's a change in state of delivery candle. When price moved and closed below that, we knew we were going to be bearish. Well, if we're coming back up to that again here, and we come up to that over here, well, more than likely, we'll see some type of PD array that will give us an opportunity for a short if it, in fact, wants to move lower. We just have to wait and see. We have still plenty of time before that, before something like that happens. So we still need to just see what's going to happen here. I got this 15-minute swing high. Okay, that's a buy-side liquidity sitting right there on the 15-minute. So we could wick above that and then come lower, because as you can see, there's not a single 15-minute fair value gap here. So we just have this buy-side liquidity. So I would expect this buy-side liquidity to be hit right here. It would be nice if it's hit, because then I would look at this going short. I would look at either the 1 minute or the 30-second to go short, but I would really like this to be hit. I really would. It doesn't have to, but I really would want it. if it gives us an aggressive candle lower. All right, I'm going to wait till the 30-second. Because after this aggressive candle, and if we don't hit that, I mean, what is this telling us, guys? Think about this logically. We just had this fail right here. We went short right here. It should have hit these lows. It doesn't. It goes aggressively the other direction, but doesn't grab this liquidity. I mean, come on. This is a fake to me. I want to see a close below this. Actually, I'm going to put it right here. As soon as we close below there, I'm probably looking at this running down here. Oh man, it's going to run.
Order filled.
Missed it.
Order submitted. Order filled. Order filled.
All right, so that would happen way too fast to be able to communicate what was going on, guys. I'm sorry on that. So I got one contract. Oh, by the way, I got my drawdown account high enough to where I'm now taking 2 micros. So I'll be able to now scale, which is going to bring a lot more dynamic conversation to you guys while we're talking through some of this stuff. Oh, that's a nice candle. That's just going to run lower right now. We should run these lows. All right, back on my main chart here. Let me make sure. Let's see. All right, so that was a nice. Okay, let me explain what happened here. This candle became very aggressive. This candle right here on the 30-second, and I got in about right here before we hit it. We hit that low, and that's where I said, "Oh crap, I missed it." I was already in, and I wanted to give the opportunity on that push, so I missed that. So we went back up here. I still held that. I took size off as soon as we hit this low, and then this candle came back and hit me back at break even. Okay, it stopped me out at break even on this candle. So I was playing the inversion. It was a legitimate setup. We had this aggressive candle higher, which it should have hit this and it didn't. So I look at this as a manipulation leg. And if we're aggressive the other way, I'm going to take it. I will take it to target this low, these lows, and ideally this low down here. But we still haven't hit that low yet. Okay? So the idea behind this was playing this 30-second to the downside, but the 1 minute I bet you was probably a little bit better. So the 1 minute was a better setup right here. So we closed on that one. But we had the 30-second that was way down here, and I just wanted to wait for the 30-second because it was so, it was so low. So we closed here, and it would have been a nice trade on the 1 minute. So really it was your preference if you wanted to take whether it was on the 30-second or the 1 minute. But we're playing this inversion right here. This was another A setup. Why was this an A and not an A+? Because we didn't hit this high. Now, this also tells me something. If we don't hit this high and we aggressively run the other way, this, like I just said, is a manipulation. So you have to be able to recognize that and be okay with still taking an A setup, even though it didn't hit this high. Okay? We are probably going to drop. This is, the momentum on this candle is ridiculous on these candles. Okay, so we just wicked below this. We grabbed that low. Now, if you were still in the trade, you should be all out, because really outside of this, you're holding just for a bigger move that may or may not happen. Is this commentary helping, guys? Give me a thumbs up. Give me a 1, the number 1 if it's not working. Give me a 2 if it's not working for you. And if you do give me a 2, give me the reason why. What can I do better? Okay. I really want to see these data lows hit. How you get in is your own prerogative, because we're probably going to run these. Let's see here. Do we have, what's our, we just filled in our regular trading hours. So it wouldn't surprise me to see some type of retracement. I'm interested to see how we come back and react around this. All right, look at this, guys. Why would you not? Okay. Do you want to take this? Would you want to take this long in this context here? Do you want to take this long? Normally, the answer is yes. Right now, we don't. Why? Because we have a clear target. We have a clear data low. This data low is not. I would want this to hit before I would take something aggressive like this, especially now that we've had nice movement lower. I'm not a fan of this right here. Normally, if this was not here, this would be a beautiful trade, right up to these highs right here. Okay, Deborah. Yeah, I think we might go for London low, but I'll wait another 10 to 20 minutes before doing anything. Smart move, Adam. It's always better. Deborah, thanks for the feedback. John, thanks for the feedback that this commentary is helping. Now, this is going to be interesting. If we inverse this, that is, why would I be okay with this even though we're not grabbing any liquidity over here? Why? Because we have a target down here and we know where the momentum's going. The momentum's going to the downside.
Order filled.
$8.52 or $9.52 right now. I really want to see this come down and hit there. I thought maybe we're going to do it here. We didn't. So that trade idea didn't work out. But at this point, we just need more context. We filled in, if we go to the regular trading hours, we did fill in this regular trading hours. So I thought we might get a retracement and a long, which I wanted to see that happen. But what I wanted to see was us run into these breakers here, and which we did. So when we inverse this, that's where I took my short. Right? That idea right there was a legitimate, nice, everything showing up, giving me indications that we run low, and it just didn't. So price did not run where I wanted it to run. I did earlier, and because it didn't work out. The limit order was no, not a limit order, Deborah. I took, as soon as we closed this candle here, I set it on the screen, and to my own word, I took it. When we closed below this, after we hit these breakers here, this resistance here, that's where I went short, and we didn't. As soon as we inversed this candle right here, I got out. Or inverse this box, I got out. This isn't the cleanest price action. This is actually very disappointing price action. What should we be doing after we just inverse this? This should run this here. Okay? We should run this. If we're not, then it's price action that I want to stay completely out of. All right, so here's a 30-second. It should run right here. All right, we're probably going to run these. I did not take that one because we just saw 1, 2 inverses, 3 inverses not work out. When you see 3 in a row inverses not work out, you better be waiting to see price move in the right direction. So price finally worked out on this trade here, and it's just, when I see it happen 3 times in a row, I'm not going to take the next inversion, especially when it doesn't go in your favor, right? It should have ran here, but it didn't. It decided it wanted to grab this liquidity, do another manipulation leg, and then it runs these lows. That's what I wanted. So I had the idea, and it just didn't work out in my favor. We should hit that level there. I believe I'm looking on my MNQ chart, and it looks like MNQ already hit. So if you are in this short, we want it to hit. There we go. All right, so there it is. I got manipulated out in this price action right here. got manipulated out right there. If I was able to, if I held this first inversion, 1 minute inversion, that would have played out completely. But I got manipulated out right here. Do you guys see the story that just played out? That's really what I want you guys to understand. Do we go for a long? We don't go for a long. We wait for a long setup. If one set shows up, then we can consider it. Absolutely. But we need to see if price wants to continue lower, and it looks like it does. Right? But the thing I want you guys to walk away with, that I just would not do, is two things. One, do you see the accumulation, manipulation, and then distribution in this price action? You need to be able to see the accumulation, manipulation, and distribution. Here's the accumulation. Here's the manipulation, and then this is the distribution. Okay? So because of this price action right here, this is what I expected. Why we had the data lows here. However, what happened in here? We had manipulation. Now, this is where people and most retail traders, including myself today, will get manipulated out and get burned. And that's what happened here for me, just because I didn't want to hold through a ton of drawdown. But if you were in a short from up here, if you were in a trade from up here, well, and decided you wanted to hold through that whole thing, that's 80 handles, right? Or you just take one not knowing what's going to happen, which we didn't. We had an idea, but we just weren't confident in it, and you could have got 27 handles. Now, we didn't take the 1 minute, we took the 30-second, and we saw what happened here, right? So my point is, when you have a bias, do not allow the manipulation to take you out. Okay? You need to make sure you are, I had the right idea. I just went in on the short that was one before the actual one. It ran on this one, not on this one. This is the one I played. I played this short here, but it didn't. It ran against me, grabbed liquidity, and then it ran this one. Okay. I don't think we're going to go long quite yet. I think we have further to go. We could go all the way down to this low down here. Considering we've already seen a manipulation happen, we really need to consider this the distribution. What do I mean by that? And Deborah, I'm expanding on your question that you had. Okay, if we look at the 5 minute here, we see, hang on, I got it. Sorry about that. I had somebody calling. We're running, if you guys see on this 5 minute, we're going to run this low probably. So why do I'm expanding on what you're talking about, Deborah. We ran these lows here, and your question was, do we now look for a long? The answer is yes, we can, but what else do we have? We are right now in the middle of a market maker sell model. So we went higher. We grabbed liquidity here. We pretended like we were going to grab this here, but didn't, and move aggressively the other way. You have to look short until a key level is hit. Could it have been this one? Yes, but as you get better with watching with chart time, you'll see that this is the obvious low. Okay? And we even have more. If we really want to be aggressive, we have another low here. So when I mark these out, I'm marking these out and I'm saying to myself, okay, now that we grab this low here, are we going to reverse? Are we going to just retrace and continue? Or are we just going to blow right through it? Are we just going to do this and run this low right away? Or are we going to retrace some and then go lower, or are we going to completely reverse? These are the questions that you need to ask yourself, and you start looking in price to help determine your what you're looking for in price. And look how heavy this is. It's probably just going to run lower. Now you may want to chase this. The risk on chasing this is at any point in time this could just retrace. At any point in time it could give a 15, 20, 30 handle retracement. Those are what suck when you're trying to chase. Patterns, I look at liquidity. If you look at patterns without liquidity, will lead to disaster. Patterns with liquidity will do you much better. And everything that we're looking for is patterns, but it has to be in the context of liquidity and imbalances. Liquidity is swing highs, swing lows. Imbalances are fair value gaps where price moves too quickly and needs to come back and rebalance. So what do we see in this candle right here? It moves so quickly that it needed to come back up and rebalance this level, and then it moves lower. That's what we're looking for in price action to help us get an idea of what direction price wants to go. So when you look at the charts with liquidity and imbalances in mind, then you look for your patterns or your models or your strategy, whatever you want to call it. Now this is just going to explode lower right here. No. Yes, but they're used completely differently. Okay? I'll explain that here in a second. I want to see this. I'm waiting for price to hit this. That's really what I want to see, price hit that. So we hit that low. Do you guys see how we hit that low? Now my question is, what do we want to do from here? What do we want to do from here? This is the question we have to ask ourselves, and we have to see, and we have to watch price. What do we want to do from here? Are we going to just purge this and then retrace? I expect some type of retracement here, to be honest. I mean, we really don't have anything else. There's a major fair value gap. If we look at the 15-minute, check out this 15-minute. We're in a 4-hour, okay? 4-hour fair value gap. We're also in a 15-minute fair value gap sitting right here. Okay, this is also a 15-minute fair value gap. Okay, so if we are in a 15-minute fair value gap and we grabbed liquidity, then this is probably a good spot that we need to just wait for more information. I expect some type of reversal here or a retracement here. Okay, Deborah, I'm going to get to your, I'm going to answer your question. I think that's a great point between the difference between supply and demand and liquidity. I'm going to explain the difference. We are really heavy here, so we may just continue lower. It's really falling. It's really falling. And I didn't alert this on here, guys, but I did chase this low right here. As soon as we put in this order block and we closed below it, I went short right here for this low. And I'm not going to alert that because I refuse to alert chases. I just think this isn't an alert channel. This isn't where I'm just calling out alerts. This is an education based, and this is something where over time, you will find the comfort level you're willing to take on a chase like this. When we get this first green candle, and we start going against it, that's my indication with a strong key level here that I'm going to chase this. You don't do it on all cases because in some cases it won't grab it. But when you see how heavy this is, I'm going to take it, especially if we have lower prices to go. If it's the final target, it could take a long time for it to get there. NQ 1 hour, 50% fair value gap. Okay, right here, I'm looking for longs. I like these highs right here. This is too small of a fair value gap for me to really want to play long off of this. Okay. I'm not going to play that more than likely, but now I'm waiting for some type of long that we can target. This should have a good retracement after we hit this key level. Okay. I'm not going to take this, but we're going to watch it. Okay, I'm not going to take this, but let's see if it oh man, that 30-second is not going to give you an option. So here's the 30-second fair value gap that we wanted to close above, and it closed way up here. So that's an invalid trade idea. We're just not going to take it. That was the fair inversion gap. Now you could find resistance here. If we find this candle find resistance here and does not go below this inversion gap, we should see it hit these equal highs because we just left equal highs behind it. So I could see it stab into here and then run these equal highs. I'm not going to take this, but that's what I would be expecting. So I would want to go long somewhere around here. And if we close below this, that's where I'm taking it. Okay, I'm not taking this. I will not take this. This is an idea that I want to see play out just to see what happens. Okay, so there would be my entry, that wick into the inversion gap, and I want to see this push to these equal highs. I'm not taking this. This is not a trade. I want to see how this plays out because I have a hunch that that's what it wants to do. Because we hit a very key level, people are thinking, oh, it's super heavy. Oh, we're up here. I'm going to go short now. When we already hit a very big key level, and now it's going to fake them out going lower, find resistance on this inversion, and then bust higher the other way. And come on, hit it. Just prove it. There we go. That is exactly what I expected to take place. Do you guys see that? Do you see the logic why I thought that this was actually going to play out? This is key. If you can do this, if you can learn to read price action like this, you are going to be significantly further ahead than 95% of all the traders out there, right? Every retail trader is seeing this retracement going, oh, I'm going to get in on this hump and I'm going to go short right here. They go short and they're getting burned. They think, oh, it's going to work. It's going to work. And guess where it stops? The very first fair value gap that was left. The fair value gap that we could have gone long on, right? And that's why I put this here, to show you that, look, we're probably going to come back up and hit this. Why? Because retail thinks we're going to go short. The algorithm says, no, I'm going to grab all your stops because I'll go short later, but I want to grab it right now. So we run and grab this liquidity before it wants to do anything else. So it's just, this is how price moves. It's here to grab liquidity. It's here to steal people's stops, steal people's monies. You just need to be able to understand how price is moving so that you can be on the other side. You cannot beat the algorithm. You can only join the algorithm and be on the same side of it. Once you figure that out, you're going to do significantly better. Do we have to go higher? No. But knowing what I do know, I expected this to happen right here. We left equal highs. I figured we're going to come in here and then grab it. And that's exactly what we did. End of story. Let's move on now. I'll probably turn that into a video. That's a great explanation of how price moves. This is the difference between supply and demand, Deborah. This is the difference between supply and demand. Supply and demand, or not supply and demand. What were you saying? Supply and demand zones. This would have been a supply zone. They would have called this as. You know what? I was thinking something different. Hang on. I want to see this here for a second. What are we going to do? I think we're going to chop back and forth, guys. I think we're going to find some... we're going to consolidate after this move here a little bit. So the answer for you, Deborah, I was thinking of support and resistance, not supply and demand zones. So your supply and demand zones would be similar. Anything above these swing highs will be a supply zone, and anything below this would be a demand zone. However, if you don't understand narrative, your demand zone, let's just say this is your demand zone. If you see this as a demand zone and you decide to go long right here and you don't understand where liquidity wants to go, where true liquidity is, this could just blow right through it. So this is what people will call, while it's a demand zone, they'll call this resistance. And it's not resistance. It's liquidity. It is where stops are sitting below here. So price will purge, will run through these areas, grabbing the stops sitting below these levels, and then eventually at an undisclosed time will then run the other direction. We are waiting for the signatures in price that show us price wants to move the other direction, right? We don't go long the moment price runs into these so-called demand zones that are sitting right below this liquidity. That is a recipe for getting ran over by the algorithm. When price runs these lows and hits these demand zones, we have to ask ourselves two questions. Does price want to run lower, or is price want to go higher from this point? What do we look for as a result of that? We look for our model. We have a model inside of price action that gives us the green light to get in. So let's just say this was our key level here, okay? It's not, but let's assume this is our key level. We ran this demand zone. We're in the demand zone. We don't go long here. We go long here. We go long here. Why do we go long there? Because we inversed, we have a model that shows right here. This is the model, right? If we come and we make a lower low, we run a demand zone, pretend this candle is not there, okay? I'm using this as an illustration. We hit this demand zone, it could still go lower. We need our model to show up in price to give us the green light to go long. So what happens is we find some resistance, demand zone. But then we see our model. We see our fair value gap sitting right here that's inversed. And then guess what it does? It goes longer. It goes higher. It runs liquidity on the buy side in the quote unquote supply zone. Now the same thing happens when you're going long, right? Same thing happens when you're going long. Once you hit this, price is going to run through this to grab these stops. You have to ask yourself, does price want to continue higher at this point, or are we going to find a supply zone here, what you call supply zone, what I just call liquidity, and are we going to turn around? What do? We wait for a signature in price to give us the clue that price wants to run the other direction. And a big clue in price action is two terms that I'll spend more time on in later videos, which is market structure shifts and a change in state of delivery. These are market structure shift and a change in state of delivery. These are two signatures in price that you need to understand to help you figure out, does price want to change directions, or are we going to see a continuation, right? So that is how I would view supply and demand, liquidity, and imbalances. The reason why I don't like supply and demand is, where is your supply up here? At what point do you hit your supply? Here's why I say I don't like that. Look at this fair value gap right here, okay? This is a signature in price to go short. This is a fair value gap, and it came up into this when we knew price was going to go lower, and as soon as it goes into this fair value gap, we collapse. We drop lower. Was this a quote-unquote supply zone? Maybe you could have called this this high right here, that high right there, a supply zone, but no retail person is going to see that as a supply zone. Every retail person is not looking at it in that way. So this is why I don't call them demand and supply zones. I call it liquidity and imbalances. This is an imbalance. That price moved so quickly lower that it didn't deliver price efficiently between this candle's low and this candle's high. This is what we call a fair value gap. When price comes up into here and it comes into this fair value gap, it rebalances this area, giving it the green light to move lower. Now, does it always do that? No, it doesn't. We saw right here how I got manipulated out, that it didn't want to do that. It didn't respect any of these inversions. It didn't respect any of the fair value gaps except this one here. This tiny one. There was no light bulb moment for all of this. So hopefully this explanation, guys, helps bring clarity between retail concepts such as supply and demand and how I trade and how ICT and many other ICT traders trade, which is liquidity and imbalances. We look for liquidity to be ran and imbalances to be filled, and then we read price from that point to determine if price is going to continue higher or if it wants to reverse. So I like it going higher right here. See this? That's a breaker right there. This is a low, the body's low, lower body low. So unless we really are heavy, and there's a chance that could be, this is why I wouldn't take it, but I'm just watching to see if price wants to find support here. So obviously you can see that didn't work, right? Why did I think that this could be an option? Why? We hit a key level of liquidity. Now I have to determine, does price want to continue lower or not? And this rejection of that tells me that we may want to move lower. We need more, we need bigger candles, we need a bigger move. The other thing is we're only at 10:30. We're at 10:23 right now. I'm going to wait till 10:45 before I really execute on another trade idea, because what typically happens between these macro times is you're going to get manipulation. Oh, it's going to run the other way. Nope, we're going to stay in this range. Oh, we're going to drop this way. Nope, we're going to stay in this range. That's what happens more times than not when you're outside of a macro time. Macro times are the last 15 minutes and the first 15 minutes of most every hour of the New York session. There are some exceptions. The noon, the lunch hour, I don't use the macro of the lunch hour until 12 p.m. I don't do 11:45 as a macro. Noon is my macro for the lunch hour. I treat that completely different. And then the 1 o'clock, I don't do the 1 o'clock either, because that's the end of the lunch hour. You may see price finish something out. I just don't like using the macros. But the 10 a.m., the 11 a.m., and the 2 p.m. and 3 p.m. macros. Those are my favorite macros that I like to focus on. And if I had to pick two, it would be the 10 and 11 a.m. macro. Those are by far my favorite. I have a higher win rate in the morning than I do in the afternoon. For those of you that were on yesterday, thanks for those of you that decided to use my code for more Apex accounts. I really appreciate that. I had a couple more of you purchased them using my code. There's zero extra cost if anybody's going to use them. I only say this to those that may already use Apex. If you do, this stream is free. All I ask is that you consider using that code. When I hit about 30 transactions, they'll allow me to use a new code, which I really, really want to get rid of this code right here. I mean, ESNZUCSF. That's just, it's ridiculous. Nobody's going to remember that. I'm going to be changing it to DTJ, the code DTJ for 80% off. So eventually I'm going to change it to that. But if you do use Apex, consider using that code. I would greatly, greatly appreciate it. And hit that like. If you like the commentary, if you like the explanation of the supply and demand of liquidity and imbalances, give me a like. I would greatly appreciate it. Thanks, guys. Let's see here. What do we got going on? I'm going to go back up to the higher time frame and see what we got in context. See what context we have. All right, so here's our 1 hour. And actually, let's just focus on this right now. Okay, we're looking at the 1 hour. I'm going to make this abundantly clear for you guys to see. That is for an evaluation. So you cannot go straight to a performance account until you pass an eval account. So Apex has 3 stages. Stage 1 is prove that you can make $3,000 without losing $2,500 on a rolling stop loss, basically. So stage 1, prove you can make $3,000 without losing $2,500. Stage 2, in a PA account, do the exact same thing. Prove that you can make $3,000 without losing $2,500. Stage 3, anything above your $3,000 limit that you made in your stage 2, you now get to keep. It's your money. You keep 100% of it until you make $25,000 on that account. And then Apex will keep 10% of any profits that you make. Okay, so 3 stages. If you start on demo and you're like, okay, I just need more emotions involved. I need to work on my emotions and handle these. I just feel like I'm clicking stuff on demo. That's where you move to stage 1 in an eval account. And you get an eval account. They're $25, $20 for a 25K account, 50K account, depending on what it is. It's $37 for a 50K account. So if you want to pay less than $37, go for a $25,000 account. But then you're going to be in the eval account. Now, If you lose $2,500, they'll take the account away from you and you have to buy it again. So you have to spend another 20, 30 bucks. But it creates that like, oh, I actually have to try here. Oh, I have to take good setups. Oh, I just shouldn't be gambling here. And so it's much better than trading your own capital by far, but you have to treat it like a real account and you can't gamble with it. So you pass stage 1, you go into stage 2, which is a real account, which is an account you make money on, but you have to prove again that you can make $3,000, and then anything above $3,000 you get to keep. There are some other small things in there, but that's for this conversation a little irrelevant to talk about. Okay, so I was talking about higher time frame. Here's our 4 hour. This is let's jump to the 4 hour here. So here's our 4 hour. We wicked down on this 4 hour candle to the consequent encroachment of this 4 hour candle. Okay. This is going to be huge. If we close below this 4 hour, this is higher time frame. This is going to take some time. There's a good chance we will run this low. And with all the news that we have this week, there's no doubt in my mind we're probably going to run this. I'm highly confident in that. Okay. So we're in a very weird spot right now. We're in a wait and see spot. Let's drop down to the 1 hour. This is the 1 hour. Here's the 1 hour fair value gap. Okay. So here's our 1 hour. Same thing for the 1 hour. If we close below this 1 hour, we high probability will run for these lows. But if we do that, we still have to wait for our setup. We still have to wait for price to give us an indication that it wants to run lower. We have to wait for that, okay? So we're waiting for 29 minutes on the 1 hour. We got like 3 hours on the 4 hour. So on the higher time frame, we're in a holding pattern. So we have to drop down to now the 15 minute. What context do we have on the 15 minute that could give us an indication that price wants to move? We have some nice. Hang on. All right. I like this. No. All right, so I'm waiting. I'm gonna see if where this closes, but this is I like this fair value gap for this high. I'm gonna take half size on this. Oh, it did not close. It did not close, so I cannot take that. Because we're in this area, this is why I'm looking for the long. It's very subjective on where price wants to go. It could go higher, it could go lower. So at this point, I'm reading price. I'm looking at price to tell me where it wants to go. And that's why this looks interesting to me, because we are at this point running liquidity. Now I can't take this tray, okay? I cannot take this trade anymore. I wanted to run it to this high right here. That's really what I wanted, but I wanted it to close down here and then take it so I can move my stop to break even right here. So I can't. I refuse to take it this high. Why? This will probably still work and hit this high, but why would I not want to take it? Let me tell you. Look at this. Look at this drawdown. 22 handles is what you would have to be able to hold through. Nobody wants to do that. And you have to wait for the close. Okay, so right now that's 23 handles. Okay, if we close below this fair value gap, that's when this candle would be below this. That's when you would want to get out. But I'm not getting in the first place because we closed so freaking high. I don't want to hold through all of this. That's just irresponsible. Okay, and look how it wicked lower and then it closed way back up here. We still can wick lower and still wick above this. I just refuse to hold through drawdown like that. Okay, I'm at this point I'm showing you guys this because I really want you to see. I want to talk through some of the psychology on this. This is what I'm looking at for. I wanted it to run here. And if I would have gotten in, guys, at the close of this candle, that's only 6 handles with a 23 handle drawdown so far. This is a horrible risk to reward. This is 0.25 risk to reward. I mean, this is horrible risk to reward. Why not enter now? Because that's a great question. That's a great question. Okay, let me answer that in a second. I want to show this. Okay, we haven't stopped out yet. We still have 46 seconds. Let's see what happens here. Okay. And Sons of Rhythm. I want you to give me your answer, what you think as you see this candle play out. Okay? Technically, this is not stopped out until we run this swing low right here. Swing low on the opposite direction. Oh, look where it's going. What is it going to do? Seven seconds. High probability we're going to close below it. Yeah. All right. So then that's stopped out. That's a loss for you. Now, why didn't I take a long? Sons of Rhythm. I'm going to explain. Why wouldn't I get in long here? Okay. You absolutely could. You absolutely could. But look to your left. What is preventing price from stopping below this swing high? What is preventing price from stopping before this swing high? Nothing. There should be absolutely no reason this candle stops and does not hit this high. That's how you should view it. If you view it that way, it should change the way you view when price comes back down here. If price doesn't hit this high and there's no reason that it should have stopped, then this is sus, man. This retracement is sus. I don't want to take that or mess around with it because honestly, price should have ran right here to this high. Let's go back to the trade that I told you I expected price to come. Where was that? Where was that? Was that on the 32nd? I think that was on the 32nd. What are we on right now? Okay, it was right here. Okay. Now, why did this one, was it this one? No, where is it? Right here. Okay, so this was the other one. This is a similar one that we were talking about. I'm going to remove some of these guys because I want to be able to talk without all this distraction. Okay, so Sons of Rhythm. I did a tape read on this play right here. Okay, we're going to talk about what's the difference between those two plays. Okay, this was the inverse. We closed way up here, but we didn't hit this high, and we came back down into this fair value gap. And I said, I bet you we're going to go long. If you could go long right here and you could get a win. And we did, right? What's the difference between, I want the chat. I want the chat to answer this. What's the difference between that play and going long what's the difference between this opportunity here and getting long here and targeting that high, maybe getting long in this fair value gap, and what's the difference between that one? Or no, I'm sorry, give me a second. What's the difference between going long here and going long here? What's the difference? There's a very key difference. There's a very key difference. Eventually, this did work out, but it did run against this fair value gap, so the trade became invalid. The biggest difference is this. This swing low. The biggest difference is the sell side liquidity right there. Sell side liquidity sitting right here. We just stabbed a very significant level. We just swept this very significant level. There is a higher probability we get a retracement from this candle, from breaking liquidity here, than we will when we have all of this chop back and forth, and then we decide we're going to run this, come back into here. Do you understand that? The difference is we just swept liquidity. We're going to find resistance here to grab more liquidity higher. Compared to we're going up and down, we're making swing lows. We now have low resistance liquidity here that price could run. We could run this right here. So if price doesn't want to actually complete the job, I'm expecting it to run this. I'm not expecting price to run back down here after we hit a significant level so quickly. And we didn't. We hit the high and we came back down and we consolidated, right? That is the difference. Hopefully that's clear as mud for you. Sons, give me a sons of rhythm. Give me a 1 if that makes sense. Give me a 2, and if you need more clarity, put it in the comments, and I'm happy to bring some more clarity on that. All right, I want to go to a 15-minute here. I want to look what candle hit my target. All right, that's too big. So we have the candle that hit the sell side liquidity here. We have this here. This technically is called a change in state of delivery. That is the point. If we close above this level here, on a 15-minute time frame, we should see higher prices. That's how I would want to treat that. Okay, let's drop down to a 5-minute. 5-minute, we closed above it here, so we technically saw a 5-minute change in state of delivery right here. When we closed above this candle right here, we saw a change in state of delivery where we should start seeing higher prices. And guys, give me a second. I got my son staring at me. He has a question for me. Okay. Okay, I see. Why then you were considering taking the second trade on the green candle if it wasn't that big? Give me the time. Give me the time. I don't remember. I'm not quite remembering. If you're talking about going higher, if you're talking about the second trade, I wanted it to be a small candle. I wanted it to close. If you're talking about this inversion that I wanted the close. I wanted us to close just above it. If we were to close right here, I would have taken this long. Okay? If we closed there, I would have gone long. Okay? And here's what I would have done. I would have target this high. And as soon as we broke above this candle right next to it, I would have moved my stop to break even. And what would have happened? I would have been stopped out. So that would have been a break even trade for me. That's why I was willing to take it. What's up, Peter? 1032. Is that the 1032? Yeah. Hopefully that answers your question. I would have taken this, but because it closed so high, I'm not going to take it anymore. If it closed just above this box, I would have taken it. When we hit the 1031 candle high, I would have moved my stop to break even, and I would have been stopped out for a break even trade. I'm okay with break even trade, guys. I'm okay 100% to take break even trade after break even trade after break even trade. I don't care. The reason I don't care is because I'm preserving my capital. I'm preserving my gunpowder, so to speak, for the trade that actually explodes in my favor. That's the difference. And right now, break-even trades are going to save me. It's saved me twice so far today. Twice or one? For sure one time, maybe a second time. I can't quite remember. Look where this candle, look where the 1042 candle wicked up to. Look at this blue line. This is the new week opening gap from Sunday, from Friday to Sunday. Touched it to the tick. I'm expecting some I'm expecting some time distortion. Time distortion is another fancy word for saying consolidation. I'm expecting some sideways movement here. Okay? Even though we're at a macro, if we get a clear macro setup, I may be interested in it, but we've had such a big move right now with all this move here that I can see price just wanting to consolidate a little bit. Peter, you said, today I'm watching the order flow on my Sierra chart platform. The amount of manipulation is out of this world. I don't know what the Sierra chart platform is. I don't know if it gives you better clarity of manipulation. But yes, there's tons of manipulation going on today. Tons of manipulation. I mean, that's why having a bigger higher time frame analysis is so helpful. I mean, I got manipulated out right here on the short. It would just, in a matter of just 2 extra minutes, I was manipulated out. But if I was able to hold through that, that would have been freaking amazing. I ended up making what I lost here back when we were down here on a momentum trade towards this low right here. I took that. But that I'm basically back at break even for that. Peter, with that kind of manipulation, it is impossible to profit from either long or short positions. It is not impossible. You just have to be significantly more patient. Patience and not taking setups that you normally would. You just got to be way more patient to watch for that A+ setup. And when that A+ setup presents itself, you execute. I looked at my screen right there. I thought that was a birthday cake. I'm like, that cannot be a birthday cake on my screen right now. It's not. All right. Here's something I'm working out. Where's this? All right, so on the 5-minute, we had a change in state of delivery. Okay, here's the change in state of delivery. Here's our 5-minute change in state of delivery right here. Okay, when we see this candle, and this is me, I'm still working out some of these details here, that I need more time in front of the charts so I can see it more clearly. But when I see it in post price action, it's easier to spot out, obviously, for obvious reasons. So I just didn't. I'm better on the 15-minute, not on the 5-minute. But here's the 5-minute setup. Okay, so this is the candle that closed below this sell side liquidity right here. Okay, there's a sell side liquidity. This candle closed below it. This candle will be a change in state of delivery. When we close above it, we have a change in state of delivery, and then this candle's high right here becomes our breaker, as well as we have a model 2022. So we look for retracement. We look for a fair value gap sitting between 60 and 79%. These are the yellow. I'm sorry, guys. That's horrible colors. Let me change this. That you can't even see these numbers. I'm sorry, guys. This day trading Jesus logo's bothering me. Oops. So once we have that 5-minute change in state of delivery, we go back on that leg and we look for a 60 to 78% retracement, and we look for a fair value gap. Here's that fair value gap sitting right here. And price found support here and moved higher eventually, right? So I don't use 5 minutes nearly as much as I use the 15-minute. The 15-minute is just more reliable for me, and the 15-minute correlates to the 1-minute time frame. The 5-minute correlates with the 30-second time frame, and I would prefer to trade on the 1-minute than the 15 or the 30-second time frame. So if you want to learn more, I will put a video out on the change in state of delivery. I'm not going to do full teaching sessions. We're reading price action right now, but that's something that I watched for. This is a sign that we should see a change. We should see price moving the other way, and in fact we did. Okay, so it confirms that this was a change in state of delivery. Now what you do is you go back and you look at price action to find signatures in price that you could have capitalized on. Okay. How many, let's see, I don't know where I was at. Peter, I'm watching everything. Nothing can pass away of my observations. Nothing. I've seen thousands of sessions. This one is among the craziest. How many contracts of micros are you doing at one time? So, Deborah, I don't know if you were here before, but I'm working on, I have one performance account that was just roughly about $50 away from being blown, and I refused to let it blow, to get it blown. And I wanted to build the skill set of building out of that. We'll talk about fair value gaps in a second. I wanted to get out of that. So I've been trading my primary account that is copied to 9 other accounts is my micro account. And I only use one micro account that's copied to 9 other accounts. And I'm trading 5 micros on each of those accounts. Why do I do such small amounts? Number one is risk management. When you when you have 9 at 5 micros, that's still 5 mini contracts in total. So I'm totally okay with doing 5 micros because I want to keep my risk low, and the collective size of all my accounts will make me $1,000 to $2,000 per day. So 1 micro that is copied to others that are doing 5 micros. Now I'm moving up to trading 2 micros on that drawdown account, and I'll be trading 3 micros on the copied accounts. And then when I double it, that makes it 6 micros. So I'll be doing 6 micros with 2 on my primary account that's being copied. Okay. For the rest of you on the trade, give me a 1 if you would like me to take some time right now and go over fair value gaps to give you a better understanding of fair value gaps. If a majority of you guys already know what fair value gaps are or understand the concept, then Deborah, what I would do is create a separate video explaining that for you to bring some clarity, because it is a very foundational concept that you need to understand, and a lot of people don't. A lot of people will just understand fair value gaps and they'll take trades off of any fair value gap. So many of you may already know what a fair value gap is. You may think you understand how to trade off of a fair value gap, but you don't understand that not all fair value gaps are created equal. Not all fair value gaps are fair value gaps that you actually want to take. You don't want to take every fair value gap. You don't want to look at every fair value gap. There are specific fair value gaps that are more prominent and more important than others. And honestly, it just takes time to be able to determine what they are. But on a base level, how many of you understand what a fair value gap is? The previous candle's low and the candle after's high. Less can. I only use SMTs with ES and NQ. I don't. There's too much complication. I want to simplify things. There's so much stuff out there that you can. There's so much stuff out there that you could spend your time on. My goal with you guys, and even just with myself, is can I become profitable with less? Can I become profitable with considering less? That is because there's so much out there, and ICT is just a whole language that all you need to do is understand the language and then go from here down to here. Learn as much as get the general idea of a lot of things and then focus on a few. That is what I'm doing, so I don't focus on that stuff. Peter, you're only trading Apex accounts now. I think that's honestly, if you are semi-profitable or you're working on expanding your profitability, prop firms are the way to go. If you have no track record whatsoever, you should be on demo. That's what I'll say about that. Deborah, I think what would be helpful on this stream is if you tell me the fair value gap that you took a long or short on, tell me the minute candle that you took the long or short on, and tell me if it was a long or short, and give me your reason why. On here, just type it in the chat so everybody's on the same page, and then I'll go through that in detail so I can give clarity to everybody on why you should, or what you should look for when you're looking at fair value gaps. Yeah, it would be much easier for me to help you understand a specific trade than giving you general concepts that I could talk an hour about and still not answer why the trade didn't work out. Give me a thumbs up if you are gonna write that up, just so I know. Oh, it was a while ago? Well, that's not helpful. Usually do the 5-minute or the 2-minute. Okay. I used to do 5-minute fair value gaps, and then I mean, if you just look at price action, let's find one that does respect it. Here's a fair value gap right here on the 5-minute. And it went a total of almost 20 handles. It went 15 handles. So this would have been easily one that I would have taken in the past when it went short, but look how far deep it went into it. It went a lot deeper than you may want to if you're looking to go short, right? So I don't personally take 5-minute time frames anymore. I use that as confirmation, and then I go to a lower time frame so I can reduce my risk. So so I think it sounds like then, Deborah, you understand what a fair value gap is. A fair value gap at its core is an imbalance. This is a fair value gap, or its specific classification is a sell side imbalance, or this is sell side imbalance, buy side inefficiency. It's imbalanced strongly to the sell side. It's inefficient on green delivery or buy side delivery. That's why it's called a sell side imbalance, buy side inefficiency. This would be a buy side imbalance, sell side inefficiency on this fair value gap sitting right here. Okay, those are the specific classifications for a fair value gap. So when you have a sell side imbalance, buy side inefficiency, or a bearish fair value gap, you want to see it find support. When you're looking for support, you want it to stay below the consequent encroachment most times. If it stays below it, that means it's heavy. It's a bearish signature in price that price wants to move lower. If it goes above it, price may not be as aggressive to the downside, which it wasn't here, and it eventually moved back higher. We don't know how low it wants to go. It did still respect it, but you're looking for other signatures in price. Okay? So at a base level, that is what a fair value gap is. You take the previous candle's low and the candle following the large bearish candle's high, and then that is your fair value gap. Now, which fair value gap is more reliable? This one or the bigger one, and why? Okay? Assuming all right, so here we are here. We now have this price action sitting right here. If price hits a key level, assuming we hit this key level X right here, and we start seeing price moving back up, is price going to go here or going to go here? How do you determine that? Would we see price hit here and reject, or is it going to hit here and reject? Or is it not going to reject at all and just move right through it? These are the things you have to consider when you are looking at price action and you're looking at fair value gaps. How do we know which one we're looking at? So you need to look left. You need to look for overlapping PD arrays with this fair value gap. Okay? If we look left, right here, there's nothing to the left. If I take this all the way over here, there's nothing. There's no type of retracement here. If I take this all the way to the left, what do we see? We see two things. One, we're closer to all of this consolidation here. It's also the largest fair value gap in this whole range before all of this consolidation or manipulation. We also have a candle right here that wicks down into it, creating an overlapping PD array. So this candle right here creates a mitigation block. Okay, doesn't mean it's really significant, but it's the high. This is the higher fair value gap. I would always prefer the higher, especially in a seek and destroy market. If we're really trending and we're really pushing lower, then that's not going to happen. But for the most part, you want to look at the highest fair value gap, the highest obvious fair value gap, and disregard these lower fair value gaps that are smaller. You want to see these larger, more prominent ones that have overlapping PD arrays or that are close to key levels, such as this one, such as that, as a breaker. See how that's a breaker? High, low, higher, high. We break lower. I would have never taken a trade off of this fair value gap because I would have seen this candle here and said to myself, I want to see this hit that fair value gap, which I don't think it did. Did it? No, I don't think it did. Yeah, it just wicked up into it. I think it may have came back up, but I don't think it actually hit it. Yeah. So we never went all the way up here. This is what I would have wanted to see price take out. So the way I use fair value gaps is I see fair value gaps as imbalances for continuations lower or resistance to give price energy to run towards liquidity. What do I mean by that? Let's go to a 15-minute, a higher time frame. Okay. Look at this fair value gap right here. This is what I love mostly about fair value gaps and how I use them most often is right here. Okay. Look at this fair value gap sitting right here. If we replay this and we select back to here, what I would have been doing is this. And this is not hindsight. This is what, I mean, it is hindsight, but this is what I would have done. I would have seen this fair value gap and I would have saw this low. I would have said, ooh, I really like this sell side liquidity sitting right here. Let me just do this. All right, I'm just cleaning it up because I don't need all this stuff. I'll put it on later. I don't mind putting it on my charts again and again. Okay, so if we're sitting right here, I would have saw this low right here. I would have saw that low right there and said to myself, hey, I want to target this low. How is it going to get all the way down there? The way it's going to get all the way down there is by gathering more energy to explode lower. What does that mean? To gather more energy, it needs to... that's not what I wanted to do. To gather more energy, it needs to fill an imbalance. That candle right there. This fair value gap now just was rebalanced. For the first time, it was the initial rebalance. Once you see price rebalance, it can give price the energy to explode from an imbalance to liquidity. This is how I would have looked at this. I honestly, I can't remember if price actually ran this low or not. I'm just using it as an example. But I would have seen this and saying, okay, we just hit this imbalance right here, is there a setup on a lower time frame for me to go lower? Okay, that's how I would have used that. And if we play this out, we see price move lower. Now, did it go all the way down here? No, but it did go and run this low right here. It did run that low. So it gave, it coming back up into this fair value gap gave price the energy to run this low. That is what I use fair value gaps most often for. It helps me pick direction. It helps me get an idea of where price is going to go. And if I wanted to take a short off of this 3:30 a.m. candle, I would drop down to a 1 minute from that point in time. And I would have looked for a breaker. So that breaker would have been right here. That would have been my entry right there. We came up into the fair value gap. I go, ooh, 15 minute. We could run for this low right here. Remember, this is the 15-minute low that I charted out that I'm like, hey, it gave it the energy to run this low. I would be looking at that 15-minute. Let's go back to the 15-minute again. Right? Here's the 15-minute sitting right here. We came back up into, let's just go back to here. I would have looked at it coming up into here and closing here, and I'd said, oh man, I bet you we're gonna run to this low. Let me see if there's a breaker. Let's go to the 1 minute. We go to the 1 minute. We are in the 15-minute fair value gap on a 1 minute time frame, and price starts moving the other direction. I have here a fair value gap on my left. So we have a high, low, higher high. Now I'm waiting for just displacement lower so I can get an entry to run for this low down here. So I didn't get short on this fair value gap. I'm waiting for my model. Price then keeps playing out. I'm waiting for a close below. There's my close. Now I'm waiting for price to come back up into this fair value gap right here. This key level here, or this fair value gap sitting right here, which is overlapping with that. So let's just highlight that yellow, okay? As soon as price would come into that level, that's where I would want to consider taking a short. Price is hanging, it's still dropping. I'm not chasing. There it is. There it is. That is my short. I'm now going short from right here. I'm setting my stop loss at 10. And let's see if we can target this low right here. Let's see if we're stopped out. Guys, I can't remember if this does this or not, so we're finding out in the moment here. There it is, and it runs. So do you see how I used a higher time fair value gap to help me pick the direction? Then I dropped down to a lower time frame, and then I looked for my model in response to it hitting a specific key level. That is order flow. That is the figuring out the narrative. That is how I use fair value gaps. So, was that helpful? Give me a 1 if this was legit. Give me a 2 if you're like, I have no idea what you're talking about, or I already know this stuff, you're a joke. Here's our 15-minute change in state of delivery. Let's see if it closed. We got 2 minutes left before this closes. I'm curious to see what happens there. I'm going to guess it's not. That's going to be my guess. 15-minute fair value gap. This is an example of one that's happening right now. We came up into a 15-minute fair value gap. Now I'm going to go to a lower time frame. Here's one that's right here. Let's see what happens here. I'll take this trade. I'll take it on a small one. I'm okay with taking that. Okay, we have some displacement here. This is exactly what we just talked about. Let's see if it will work. Well, it might not even give us an opportunity. But we see a high, low, higher, high form. We see a break. Honestly, I'm waiting for price to come back up into this level here. That's where I would want to see it to come up into. The other thing is you got to consider this fair value gap sitting right here. Why? Because it's still an overlapping PD array, and price could reach up into this one. So the downside to taking the lower one is you could be stopped out if you have too tight of a stop. Okay. You also have this, the low of this breaker. You also could consider the close of the breaker sitting right here. So you have to decide, where do I want, you have 4 entry options for a short here. Do I want to take the lowest one, highest probability of getting in, highest risk of getting stopped out? Or do I want to go up the scale to this one, the least amount of risk, but the lowest probability of getting filled? These are the things in the risk tolerance you guys have to determine. Do I take this entry, this entry, this entry, or this one? Maybe we get none. That's a possibility, and then you just let it run without you. But we just hit a very key level, a 15-minute time frame. We closed, look at this close of the 15-minute candle. This candle, I told you, we are looking for it to close. We are looking for it to close. We were looking for it to close above this. It didn't. It wicked above it into this fair value gap and closed below it. That tells me price may, not guaranteed, may not want to move higher. But it's enough for me to get a signature in price to where I'm now going to look for a potential opportunity for a short if we have a higher time frame narrative for a down move. And if I go to the daily time frame, I don't have a clear answer on that, to be honest. I honestly don't have a clear answer. Why? Let me show you my chart. Let's go to the daily here. So we're on the 15-minute. Let's go to the daily. While we're waiting for price to come back up to that level. Look at this level right here. This was the previous day low. We ran that already. The previous day low was ran right there. It may not want to go lower. It may want to consolidate today. We're at the new week opening gap low and high. We're right in here. This is area where you're going to get a lot of manipulation lower and higher because we're on the week, on a weekly time frame. This is equilibrium. This is where price started at the beginning of the week. So we could see price run up and down, and we already ran these lows down here. So there may not be a reason for us to go any lower, so it makes this trade idea less probable. It makes this trade idea less enticing because we ran, again, a major level of liquidity in the form of a previous day low. Price could absolutely go lower, but you have to have a model. You have to have a set of rules you follow to help you determine what you want to do. So after looking at some of this extra stuff, I don't know if I'm going to take this. I'm not going to take it on the first stab. I may wait to see what price wants to do, see if it finds some resistance, and then take an inversion down, right? You just can't, you have to look at so many different aspects on trading, and the only way to get there is in time. Over time, you will learn it, you'll get it, you'll have more screen time to help filter some of these things out and know which trade opportunities you can take. So honestly, I would honestly look at this just a retracement and would rather see this just blow right through it all the way up. Because if it does that, I could still take that one long to these highs. So you still have trade opportunities, but you just have to be more careful, especially when we've already hit the previous day low. There's just less reason for it to go all the way back down there. We may go down, halfway. We may go down to the new week opening gap below because there's a fair value gap down here. So there's still an opportunity for an entry. You just got to be very, very, very careful. Oh, guys, that's 2 hours. 2 hours of live streaming. Less. The 10-11 candle dropping off the bottom of the regular trading hours. New day opening gap was an excellent trade. Gets lost when one stays on the electronic time chart once the regular trading hour session opens. In my experience, regular trading hours to regular trading hour price levels are fire. I would say for the most part that is 100% correct. ICT will look past the electronic trading hour highs and lows and use the regular trading hours highs and lows and use those for their targets. What do we mean by that? What is Les talking about? If you go down to the bottom right corner of your screen on TradingView, you'll see ETH. If you select it, you can select RTH or regular trading hours. Regular trading hours, when selected, will remove all of the stuff in between regular trading hours. That would be right here. This is a regular trading hour low. This is regular trading hour highs. Here's another high right here. And price will run the regular trading hour lows and highs more often than just stopping at electronic trading hours. That's what we're referring to. Now, this is a legit setup. I just wish that we came down here. What I expect to see happen is us to consolidate because we're not in a regular trading hour or we're not in a macro time. So I could see us doing this. We came up here, we came down. I could see us doing this. And then maybe dropping off from there if we in fact want to move lower. That is something that I could see. Why do I say that? Because we have multiple fair value gaps here. Price is going to do time distortion. It's going to delay its movement till the afternoon most likely. And then as soon as we get to either like the lunch hour or something, I mean, it could be way out here. Why out here? Because of time I'm referring to. This is something that you could see. Something like that. That could be lower, that could be higher. There's a lot of different options to play off of this. Why this level here? Because of this big 15-minute time frame. That's why. That is the main reason why. So hopefully this was helpful, guys. Thanks for watching today. Again, if you appreciate this live stuff, consider liking, subscribing, and use that QR code if you use Apex. I greatly appreciate it. I'm looking about 30 to 40 transactions so I can get a DTJ custom code that's way easier for people to remember. So I greatly appreciate that. Thanks for your time today, guys. I appreciate you watching. We'll see you in the